The United States Treasury is in a really bad position, and that's going to hurt everybody economically, this entire country. Anybody who tells you otherwise is either ill-informed or has their head in the sand purposely. But the fact of the matter is that the government is not able to sell the U.S. Treasury bonds that it needs to sell. So the U.S. Treasury issuances, to put it short, are only being purchased up pretty much by the Fed itself. Now, I'm generalizing here. There are obviously some countries and some institutions that are buying U.S. Treasuries, but that number has really, really collapsed massively over the last decade. And in the last 24 months, that number is just getting completely crushed. And I got to show this to you guys. And this will be maybe 15 minutes, but I'm going to explain it as quickly as possible and as simply as possible. Get this up. This is something here, like divine intervention has occurred. And you can see in this video just a couple days ago, U.S. Secretary Treasury, Old Yeller, or as, you might know her as Janet Yellen, was asked about her concerns about the U.S. dollar reserve status as the world's reserve currency. And the U.S. Treasury Department sign magically just fell off at that very moment.
Thank you, Colby Smith with the FT. You've described...
Hang on one second here. Got it back in picture. Let me get that out of there.
Thank you, Colby Smith with the FT. You've described calls for widespread tariffs as deeply misguided, and the IMF today has warned that such policies will dent global growth. Can you elaborate more on the near-term economic impact of these policies and over a longer time horizon? How concerned are you about the potential impact of the dollar's status as the world's reserve currency? Near-term economic impact of these policies and over a longer time horizon, how concerned are you about the potential impact of the dollar's status as the world's reserve currency?
That sign is exactly what's happening to the status of the U.S. dollar as the world's reserve currency right now under Joe Biden and Kamala Harris. Very briefly, you can see that the United States Treasury's 10-year and higher U.S. Treasury holdings, the SOMA Treasury holdings, they've been holding on to them, and they haven't sold any of them. And if they're so star-spangled awesome, why has the Federal Reserve never sold any of them in dark blue for all the 10-year Treasuries and higher, dating all the way back to 2010? And I'll explain why. Because they can't. They can't. Nobody really wants that shit. It's garbage. It's dog shit. Wrapped in cat shit. You may know that from a movie. You can see here the Fed rate cuts and recessions. The recessions are in red. The rate cuts are in green. And the recession always comes after the rate cut. Happened in 1980s, the 90s, the 2000s, 07, 2019. Every single time. The inverted yield curve, which you see the yield curve in black, but when it's underneath this blue line, the inverted yield curve here shows that it is one of the most accurate recession indicators ever. The longest inversion prior to 2022 was 16 months. So far, the yield curve inversion this year, or should I say these last few years, was inverted not for 16 months, but for 25 months straight before disinverting. And this is the key. Why did the yield curve disinvert? That means go from being negative to being positive again. Why did that happen? Well, you can see here on multiple things, there was double dip recession in the 80s, the crisis of the late 89, the tech burst in 2000, the GFC in 08, the C19 in 2019. A soft landing has never followed when rates moved in this way. Never, ever. And this time is not going to be different. There will be no soft landing. Here's the SAM rule created by Claudia Sam, S-A-H-M. This is a chart from the National Bureau of Economic Research and Bravos Research. You can see in orange, every time the SAM rule has been triggered, which is basically the black line that is circling the orange, It has predicted the last 9 recessions. There have been 0 false signals on the SAM rule since 1960s, and this will not end well. What that means, the SAM rule, is that every time that unemployment rate rises by 0.5% in the 6 months leading up to 2008, for example, there will be a recession. And right now we have had the unemployment rate, the U2 unemployment, increase over 0.5% here just a couple of months ago. That means in the next 3 to 4 months, we are very likely to be officially in a recession, regardless of the way that the United States government would like to skew the numbers and hide the numbers. So we just looked at 2 complete different indicators. The U.S. yield curve inversion from the 10-year and the 2-year yield curves, the 30-year and the 3-month spread, that makes 2, and the SAM rule indicates 3 recession indicators that have never been wrong. But again, speaking about the SAM rule, you can see that the U3 unemployment rate has increased since the yield curve inverted 23 months ago. On average, 23 months post-inversion, the U3 rate is up 2.1%. So that means we're going now from 0.5% unemployment, official unemployment numbers, to over 2.3% unemployment, which is going to be absolutely massive. A recession is inevitable. And you can see this tweet here from Financial Juice on October 30th, just a couple days ago. The U.S. Treasury said, we expect to buy up to $30 billion in off-the-run securities for liquidity support. This means that the United States Treasury has to buy their own treasuries. And they've been doing this for an extended period of time. This is nothing new. And they're forced to do so, otherwise they will go no bid. And if you look at the numbers, the reverse repurchase program, which is made up of money market funds. Money market funds basically means mutual funds, in case you don't know. So there's excess liquidity in the system, and it's called excess liquidity, and it's quickly being drained. And what happens when the excess liquidity runs out? Well, then the U.S. government has to use the U.S. Treasury general account, which is basically the bank account of the United States government, in order to buy bonds. So the reverse repo, as you can see here, I said earlier today, got absolutely crushed down to $155 billion today. That is down 34% over the last 60-day average. Keep in mind, a year and a half ago, this number was over $2.5 trillion. $2.5 trillion. And they have been buying so many of their own U.S. Treasury bonds that the number is now at $155 billion. It is but a fraction of what it was 2 years ago. The reason for this is because the United States is very much turning into a Weimar Republic. We are doing the exact same thing that the Weimar Republic did and that the country of Japan has done. There are not enough buyers in the open market for these U.S. Treasuries, and we're going to lead into another round of Weimarization in which the U.S. has to print and buy them themselves. That explains why the DXY and other national currencies are down, the euro, etc. Those are down because they follow the U.S. global reserve currency. Taking a look here, you can see it's at 155.4 billion with a 41 counterparties. This is the lowest number of counterparties that we have seen in over 2 years because there are far fewer entities that are trading in the reverse repo market today, with only 155 billion used, as that liquidity is being sucked out of the system by the U.S. Treasury. Other countries are very hesitant to buy U.S. bonds, and this is going to negatively impact our economy in a huge way. As you can see here, a tweet that I put out on September 5th, about 2 months ago, almost exactly 2 months ago. I said the reverse repo is on track to be 100% depleted by the end of 2024. And that's exactly what's happening, ladies and gentlemen. You can see it here. The U.S. Treasury has been using money market funds to buy U.S. bonds to disinvert the yield curve. This yield curve that was inverted for over 24 months, and you can see that here and where the little black dot is finally becoming disinverted, but not because our economy is good, not because everything is getting better and there's no recession, but because the Treasury has been using the money market mutual funds money in order to buy up these bonds. So trillions of dollars in bonds need to be rolled this year. There's very, very much insufficient amount of cash in our system to prevent the bond auctions from going no bid. On September 5th, it was at $291 billion. And of course, now November 1st, not even 2 months later, probably about 50 days later, 55 days later, we are at $155 billion. We were at 59 counterparties participating on September 5th, and there are 41 counterparties participating today. This will create a reinversion of the yield curve and a decrease in bond values. As bond yields increase, bond values decrease, meaning bond investors are losing money and are going to continue to lose money. The markets are a fallacy, and the truth is going to be felt by everybody around the entire world, because the euro and other currencies that are using the US dollar as the world reserve currency will follow without question. So if people ask, can't the Fed just print more money? Yeah, they can't. And what happens if the Fed prints more money? They're injecting liquidity in the system to buy U.S. bonds, just like Japan, just like the Weimar Republic. Inflation will roar. And I don't mean go up a little bit. I mean a massive, flaming, ridiculous fire of intense heat. Much, much higher inflation is coming inevitably in this country. So make sure you're properly hedged through investments outside of the standard S&P 500, outside of the standard mutual funds and the bond market. This is going to absolutely lead to conditions that will cause a much more pronounced financial market crash in the future. They have kicked the can for so long now, since 2008, all the way through today, many, many times, that this is going to be absolutely catastrophic when it does occur. Eventually, everything must come crashing down, and there is nothing that will stop it. I've been asked several times, what will be the black swan, or what do I think it'll be that's going to cause this problem? And the reality of the fact is that there's not one. There are many, many, many different black swans existing exactly in this very moment. The Japanese yen carry trade, the economies around the world that are entering a recession, World War III, either Donald Trump or Kamala Harris being elected, dividends from highly shorted equities causing margin calls, shorts losing massive, incredible amounts of money, or banks that are margin calling them. And it just goes on that I can't even spend much time talking about it because I don't want to bore you to death. But the fact of the matter remains that what we're looking at here is a huge, huge conflict of interest for people and from banks that are telling you to invest in bonds, to invest in treasury bills, and in the stock market, because the stock market always goes up, they claim. You need to be properly hedged. And if you look over the last year to date, for example, or even over the last 2 years, precious metals like silver and gold have completely outpaced the growth in the S&P 500, completely outpaced the dollar and the DXY. They are the true hedges to inflation. And you can ask, what if I want something that is not just physical precious metals, because I already have silver and gold, or I want to diversify more? You need to look into private equity. For example, our company now, an upcoming stock and brokerage firm, is the first ever in the history of the world to provide you, retail investors, the opportunity to own it before anyone else. No other company in the history of the world that is an upcoming stock and crypto brokerage firm has ever offered retail the opportunity to own a firm like Lit Exchange via the Reg C Jobs Act that has been passed. And you now have the opportunity, along with over 200 people have already invested over $400,000 in a short period of time in Lit Exchange. And this does give you equity in the company, as well as first buyer's rights of additional shares of stock pre-IPO, and many, many other benefits, commission-free trades, level 2 data for free, and many, many other things that you would receive. You can find our business plan, our pitch deck, and all the other details here on the website. And you can see here there are different levels of investment that you can receive. Company branded hoodies, copper coins, silver coins, gold coins, many months or even years of free level 2 data, discounts on stock trades, crypto trades, early access to new investment opportunities, projects and services, an equity share percentage, ownership in the company, and the list just goes on. And the more you invest in the company, the more that you receive. And they are cumulative as well. So if you invest more than once, you will receive the higher tier. Ladies and gentlemen, I will leave you with that. I hope that was a good Kershaw. I cannot give you an exact date as of now, but we hope to go live in the next 9 months to 12 months or so. It all depends on how many people are actually able to participate as far as retail investors. So the more retail investors that participate, the more quickly that we will be able to launch to market. So, ladies and gentlemen, I wish you peace and wealth. I hope this gave you a little bit of an understanding of what is going on with the reverse repurchase program operations and the direction of the U.S. dollar, which it is very much in the same direction as the sign here for Janet Yellen and the Department of Treasury. Straight to the ground. Cheers, my friends. I wish you peace and wealth. We're going to be filthy fucking rich if you're properly hedged. Make sure you're properly hedged. Cheers, my friends. Excellent. I want to give a huge shout out to everybody who is a channel member. If you want to support the channel directly, you can support the channel here. Thank you all to our member supporters. I really appreciate you and everyone else who subscribed. If you learned something, if you had fun, make sure you like and subscribe if you choose to learn more. Cheers. Have a great weekend.